Hi everyone, hope you're doing well. Today we're going to talk about Tesla. They reported earnings last night and we're going to talk about this Q3 that came out because there was some mega impressive numbers in this Q3. Now there was also a few things that you're like, okay, yeah, a little bit of weakness there as there is with plenty of other companies, but when you actually stood back and you stared at the numbers that Tesla just put in, it was kind of like, that is so impressive. Like for a company that is Tesla's size, to be putting them numbers in is unthinkable. To be the size that Tesla is and you look at the growth that they still have going forward was like, wow, this is really impressive. And it was impressive to see. We're probably never going to see a car company ever kind of do these numbers again. This is a once in a lifetime stock or business that's doing these numbers. We probably won't see a company repeat the progress and the potential that Tesla has in our lifetime. And we're going to go through these numbers today because, like I said, I was really blown away. And then towards the end, I'll actually talk about if I was or did pick up some Tesla shares. Now, as I'm recording this video, the stock is currently down 5%. It actually opened up a little bit lower, but it did have some buyers come in. And that has now pushed Tesla to a 658 billion market cap and a 64 times earnings stock. So when you look at that, that's actually obviously quite a high P ratio, but when you look at the progress that Tesla's making, it actually doesn't look that bad. And the thing with Tesla is that I can't believe that in 1 month we've had a stock or business that's a 658 billion market cap company that's lost 31% of its value. And that generally means that from its 52 highs, it's now down 48%. Now, when we do look into the financials, you can see here that they had an EPS beat of 0.04, which was very good EPS growth, which we'll look at in a second, and revenue of 21 billion. Now, it did miss by 510 million, which has mostly taken the headlines at the moment, saying Tesla has missed expectations. But when you do look at the year-over-year growth, that means Tesla just put in 55% year-over-year growth, which is so impressive. And if you look here, they actually had free cash flow in this quarter of 3.3 billion. They had their operating income hold around the 17.2%, and their gross margins was 27%, and they had record energy storage deployment as well in Q3. And they go and say that they had a strong quarter with record revenue, operating profit and free cash flow as well in the last 12 months, meaning that also the free cash flow exceeded 8.9 billion in the last 12 months. And operating margin reaching 17.2%, which we had a look at before. Now, it did say that they did encounter some headwinds in this quarter. So you'll see here raw material cost inflation impacted profitability, along with ramp inefficiencies from Gigafactory Berlin, and also some pressures from the US dollar strengthening, which we've heard before when we've had businesses that operate outside the US being affected by that. They also said there was some issues with transportation in the last quarters, meaning it was becoming expensive and difficult to secure transportation as well. And they're hoping to sort this out, and that will hopefully improve as well the profitability as well. But despite all this, they're still expecting to put in good deliveries and also have good margins hold up. Now, when we dig into the financials here, you'll see that they had a 55% automotive revenues, which is really impressive. When you look over year growth, to go from 12 billion up to 18 billion is so impressive. There's not many businesses, not many companies, there's not even any other company in this kind of space that is able to do anything like this. If you look here, the automotive gross profit as well held at 42%. Now, it did decline slightly on a year-over-year basis, but still 42% is pretty impressive. And obviously we can see, or they've mentioned a few ways that they can improve that. But you'll see here that total gross profit as well did go from 3.6 billion up to 3.3 billion, and that grew 47% year-over-year as well. And that also meant adjusted EBITDA was up 55%. And free cash flow was up 148%, with cash and cash equivalents as well increasing 31%. And it was also a very strong quarter for the storage deployed, and also there were still good increases of their mobile service fleet, and the superchargers as well still growing at very good rates. Now, in the conference call, I highlighted a few things that was said that was quite interesting. So it was to say that Q3 was another great quarter, even with the pressures that was on. They had industry-leading operating margins of 17%, and also the free cash flow that we mentioned earlier. And they said that looking into Q4 also looks like a pretty good quarter and going to be a good finish to the year, which was really good to hear as well. Elon also identified the opportunity that Tesla still had. So they said that of the 2 billion cars and trucks on the road, we only have about 3.5 million. So there's a lot of way to go to even reach 1% of the global fleet. He also mentioned about buybacks as well, and they've also talked about potentially buying back at the moment. At the moment, it doesn't make sense, they said, to do buybacks at the moment, just because of some of the pressures that are going on in the world and if there is a massive slowdown. But it said that it is possible that if that risk does disappear, that next year we could see potentially a buyback of 5 billion to 10 billion, because they are generating now so much good amounts of profit and obviously cash that go in on the balance sheet, which is fantastic to see. Who would have thought Tesla would be buying back shares at the moment? Elon also said that he is also hoping that the business can potentially overtake a company like Apple, which is quite a big statement to be saying, that he thinks that we can be one of the biggest companies in the world. On energy profitability, which they did achieve, energy profitability as well, which was really impressive. It also went on to more about the logistic issues, which you can see here. And they said, as we look ahead, our plans show that we're on track for 50% annual growth production this year, which is pretty good considering the issues that they've had. And they said that Boston and Berlin ramp costs will continue to weigh on margins, although we do expect the impact to be less than what we saw in Q3. So that should help profitability in the coming few quarters as well. Elon also said demand is a little higher than it would be otherwise, but as earlier, we are extremely confident of the great Q4, and we anticipate continuing to grow our vehicle production sales by, on average, 50% a year as far into the future as we can see. So this is a long-term effort from Elon Musk and Tesla, that they're going to on average increase their production and delivery by 50% a year, which is absolutely insane, because the growth rates you're going to be growing at and the profit that's going to generate is going to be unbelievable. Elon also gave a bit of an update that he's expecting on the Cybertruck to see early production in the middle of next year. So that'll be great to see the Cybertruck arrive, which is obviously another sales driver going forward. And he also mentioned about the Tesla Semi, which is going to be, well, they said they're going to be handing over the first production of Tesla semis to Pepsi on December the 1st, and they'll be start ramping up the production of Tesla semis. So really we'll start to get that more and more in 2023, but this is an exciting thing to be looking out for in Q4. And if you look over a year basis from the net income, you can see here that it went from 1.65 billion to 3.33 billion. And on an EPS basis here, you can see here that that meant we went from 0.54 on a basic per share to 1.05. So that is a massive income increase here on the EPS as well. So overall, this was a really impressive quarter from Tesla. They had insane amounts of revenue growth and will continue to grow, or the target is to grow at 50% revenue growth per year. Obviously, looking at profitability is following that, and Tesla is now generating good amounts of profit, where they're actually now looking at a place where they could generate enough cash to potentially look at buybacks next year. Well, you've got the semi truck that's going to come in towards the back end of the year and into 2023. Towards the back end of the year, we've got the Cybertruck that's coming up. The solar part of the business is ramping up more and more, and is even making profitability now, which is absolutely crazy. There was a few things about the self-driving as well, and saying how much that's developed as well this year, and potentially is basically to a point where it just needs regulatory approval, and that's going to be another income potentially, and help improve them gross margins that are better or more achievable than what any other kind of company in this kind of industry produces. And this was all during quite a tough period for Tesla, where there was quite a few pressures that was going on in the business, and it's just insane. It's absolutely insane to see a business like this producing these sort of numbers. And I mean, a business like this to be every year producing 50% revenue growth, give or take a little bit, is just going to be absolutely insane. And this quarter very much seemed like Tesla smashing it out of the park, and the business is very much going like this. Now, it just seems like that analysts were a little bit disappointed, and it was like, oh, it was a little bit below the numbers. But when you look at long-term picture, Tesla's growing at an impressive rate at the moment, and it should not be ignored how fast it's going, as well as generating the amount of profit that it's generating at the moment. And the thing is, people always talk about the valuation with Tesla, and you look at it and go, oh, it's a little bit of a rich valuation. But the reason why it's such a rich valuation is, name me a business that's doing these numbers. You know, name me another business that's doing these numbers at this sort of size. There's no other company in this sort of industry that's delivering these numbers that has the growth potential when they're bringing the Cybertruck, when they bring the semi-truck in the next few years. When you start running the numbers, and you got to remember, we're not valuing a stock off what it is right now. That's what a lot of people do. A lot of people value a stock over what it's doing right now. You're not going to be a very successful investor if you're valuing the stock of what it's right now. You've got to be looking at what the potential growth is going to be for Tesla in the next few years and where they're going to end up. And when you look at potentially the end game for Tesla and when that revenue starts ramping up and how much that's going to go to profitability, in my opinion, this valuation is very, very cheap right now when you look at the growth they're going to do and you look at the profitability they're going to do and all the different parts of the business here which are lining up very well. So for me, when I looked at today's drop in Tesla, which the stock is already down obviously a fair amount, you add another 5, 6, 7% down on the stock. You look at the financial performance, the profitability ramping up, the revenue ramping up on this one, all the things that are coming up in the next 12 months. For me, I actually had to buy some shares in Tesla. I actually bought and opened up a position in Tesla. Obviously for me, I owned Tesla in 2018, 2019, 2020, made one of my biggest returns on the stock market. Even in a tough year like 2021, I then bought back into Tesla, made good money again on that time. So this is actually my third time owning the position. And yeah, I think that once again, this looks like, in my opinion, very good valuation. I can put up with the bears that are out there going, oh, well, it did miss revenue a little bit. So what? You know, even if it missed revenue just slightly, look at all the things that are going on in the business. Look at how much that revenue is increasing. There's no demand issue here. The profitability ramp up is absolutely insane. And I just look at this business, you know, doing absolutely phenomenal things. And I'm looking at the moment and go, people are having a little bit of a wobble because it was just, the revenue was just slightly under than what is expected. Give me a break. Like, you know, that's only one quarter. By the time we get to Q4 or some of these pressures start going out of the way, you're going to look at the long-term picture and you're going to go, Tesla just grew another 50%. The profit's growing 50%. And the thing is, a few people, like I said, look at that valuation and go, it's a little bit of an expensive valuation. When you are growing at these sort of rates, it doesn't take long for that valuation to come down and that stock looks incredibly cheap and people will be buying into this stock. So for me, I look at Tesla and I definitely can see Tesla doubling in the next 5 years, especially if it continues to execute like how it's doing right now. And I did buy a few shares today in Tesla, and I think that earnings report was a very solid earnings report, and I think when you look at the valuation, I don't think it's too bad either at these sort of levels. So yeah, pretty good numbers coming out from Tesla at the moment, and I hope you enjoyed the video. If you could hit the like button if you're new, subscribe, and I'll see you in a bit.